Hey everyone, welcome back to Corporate Decoder, the place where we decode the complexities of corporate filings to bring you the real story behind the numbers. Today, we're diving into how a company goes public and what that means for its early days. This is a Form 8KA, which is a special filing by Quantumsphere Acquisition Corporation. Essentially, they are correcting or adding information to a previous report. Think of it like sending a follow. Upnote to the sexy with some extra important details they initially forgot. The main event here is all about the company S initial public offering, or IPO, which happened on the 7th of August 2025. Going public is a huge step for any company. It means they are now selling shares to the public on a stock exchange and being watched very closely. Quantumsphere Acquisition Corporation, or QUAMSU as it is known on the Nasdaq, is what is called a Special Purpose Acquisition Company, or SPAC. These companies are created specifically to raise money through an IPO and then use that money to buy or merge with an existing private company. So they are basically a blank check company looking for a target to merge with. Now, what did they actually sell to investors during this IPO? They sold units. Each unit was made up of one ordinary share and one right. These rights, QUAMSU, give the holder the ability to get a fraction of a share later on. It is a common structure for SPACs, aiming to attract investors with the promise of a future acquisition. The ordinary shares, QUAMs, represent ownership in the company itself. The par value is extremely low, just 1/10 of a cent, which is typical for shares in these types of offerings. It is more about the voting rights and potential upside than the intrinsic value of that tiny piece. And as for the money involved, yes, it is all in US dollars. So, on the 7th of August 2025, Quantumsphere Acquisition Corporation had its IPO and sold 7.2 million units. But wait, there is more. The underwriters, essentially the investment banks helping sell the shares, bought an extra 1.08 million units because people wanted them so badly. That means a total of over 8.2 million units were sold. This is a pretty good sign of investor interest right out of the gate. Each of these units went for $10, bringing in a massive gross amount of over $82.8 million. That is a lot of money raised from the public market. But the story doesn't end with the public offering. At the exact same time, there was a private placement where the company S sponsor, White Owl Holdings LLC, bought an additional 228,650 units. They also paid $10 per unit, bringing in another $2.2 million. This is pretty standard for SPACs, as the sponsors usually invest their own money at the same IPO price. Now, what happens to all this money? A chunk of it, specifically over $82.8 million, was put into a trust account. This trust account is super important for SPACs. It is meant to protect the public investors' money until the company finds a business to acquire. If no deal is found within a certain time frame, this money is typically returned to the investors. This filing also includes an audited balance sheet as of that IPO date, the 7th of August 2025. This is basically a snapshot of the company S Financial Health at that very moment, showing all the cash they just raised. Scroll on the 13th of August 2025, Quantumsphere Acquisition Corporation, the company, filed a current report on Form 8K, the original Form 8K, with the Securities and Exchange Commission to report the consummation of its initial public offering, this amendment number. One to the current report on Form 8K, Form 8KTR, is being filed solely to include disclosure regarding a finder fee agreement, dated the 8th of August 2025, pursuant to which the company engaged Aspira Capital Consulting Ltd. The finder fee agreement was inadvertently omitted as a subsequent event from the audited balance sheet included in the original Form 8K. No other changes have been made to the original Form 8K scroll. So why is this filing an 8KA an amendment, and not just the original report? Well, they forgot to include something important in the first filing. They originally reported their IPO on the 13th of August, but this amended filing clarifies something called a finder fee agreement. This agreement was made on the 8th of August with a company called Aspira Capital Consulting Ltd. It seems they had to pay a fee for helping out in some capacity around the IPO. This agreement was accidentally left out of the original balance sheet report, so this amendment is just to fix that small but important omission. Looking at the bigger picture, Quantumsphere Acquisition Corporation, like any SPAC, is now in a race against time. They have their IPO funds secured, but they need to find a suitable company to merge with. The clock is ticking, and the pressure is on to make a smart acquisition that will create value for their shareholders. Their success hinges entirely on their ability to pick the right target and execute a smooth merger. So, what does this all mean for us as investors or observers? Quantumsphere has successfully raised a significant amount of capital through its IPO, demonstrating investor confidence in its future prospects. However, the real test lies ahead, finding a valuable acquisition target. The venture seems promising at this stage, but the market is volatile, and the SPAC's ability to navigate the complex M&A landscape will ultimately determine its success. We'll be keeping a close eye on their next moves to see if they can turn this initial capital infusion into long-term growth and value for their shareholders. Alright, that is our breakdown of Quantumsphere Acquisition Corporation's IPO filing. What is your take on this SPAC's journey so far and what it signals for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the corporate world. Don't forget to check out our Discord in the description for more discussions and insights. Thanks for watching. See you next time.